In the ever-evolving landscape of technology, pivotal moments arise, signaling a potential revolution. These moments echo the fervor surrounding the commercialization of the internet in the 90s or the advent of mobile and cloud computing in the early 2000s. And in the tech circles of 2023, a similar sentiment pulsated with the advent of generative AI, particularly heralded by the launch of OpenAI's ChatGPT in late 2022. Imagine it, a collective breath drawn in anticipation as if standing on the brink of something immense. For many entrenched in the tech industry, 2023 loomed as the year when generative AI would rewrite the rules. This technological marvel, enabling computers to conjure text and images akin to human capabilities, sparked a wildfire of speculation and aspiration. It wasn't merely a product launch, it was an incitement akin to the groundbreaking debut of the iPhone. Soon after its inception, a frenetic race gripped the tech domain, compelling companies to transcend the confines of research labs and infuse generative AI into everyday digital platforms and services. Leaders in the industry, such as Satya Nadella of Microsoft and Sundar Pichai of Google, mirrored the zeitgeist. Nadella likened encountering ChatGPT to that seminal moment 3 decades past when he first glimpsed a web browser. Pichai, too, rode the crest of optimism, proclaiming the paramount importance of artificial intelligence, painting generative AI as merely the latest chapter in this saga, eclipsing the significance of fire or electricity. Erik Brynjolfsson, the erudite Stanford University professor steeped in studying the adoption of pivotal technologies, foresaw generative AI's potential to ignite a productivity surge across the global economy, revolutionizing work practices. Yet, amid the crescendo of acclaim, doubts began to cast a shadow over the technology's pragmatic utility. The sprawling language models underpinning generative AI operate in realms of probability, eschewing the rigid logic of conventional computing systems. Their prowess dazzles, whether crafting computer code or poetry, but their Achilles heel reveals itself in the propensity for erroneous outputs and what's termed as hallucinations, the fabrication of plausible yet detached from reality responses. Even tech stalwarts pioneering its deployment concede these inherent limitations, tempering the unbridled optimism. Peter Schwartz, Salesforce's strategist, acknowledges the looming ceiling on its potential. It will be useful, but not as radically game-changing as many people hope. The debate simmers. Will generative AI be the revolutionary force enthusiasts trumpet, or a valuable yet bounded addition to the IT arsenal? Answers may materialize in the tapestry of 2024. The technology's initial impact has fueled a meteoric rise in tech stocks, propelling a select group of companies to Wall Street's center stage. However, without robust momentum propelling its integration, this acclaim might be fleeting. A year mandated every tech entity to devise a generative AI strategy, but now the tide turns. Wall Street beckons for tangible revenue and profits stemming from this innovation. Jim Tierney, a discerning growth stock investor at AllianceBernstein, foresees 2024 as the litmus test, separating mere players of the AI card from those with a solid business model. As the clamor for real-world results heightens, the narrative of generative AI's future unfolds against the backdrop of anticipation, expectation, and the quest for practicality in a realm once deemed transformative. In the grand tapestry of Wall Street's dynamics, the crescendo of hope surrounding AI stood as a pivotal force, shaping sentiments, yet it wasn't the direct ignition for the 2023 tech stock resurgence. According to Tierney, the plunge in interest rates coupled with the unwavering profitability of big tech, alongside optimistic earnings revisions, emerged as the primary catalysts propelling stock values skyward. With anticipation for a soft economic landing in the US and a renewed allure for growth investments, the tech sector emerged as the vanguard, uplifting the entire market. The metamorphosis within tech companies was nothing short of dramatic. After witnessing a staggering 40% decline, equivalent to a $3.7 trillion loss in combined value in 2022, the five tech giants, Apple, Microsoft, Alphabet, Amazon, and Meta, reclaimed their glory, accumulating a staggering $3.9 trillion in market value throughout the year. In this resurgence, AI's fervor played a supporting role, while wielding a more direct influence on a particular entity nestled at the core of the AI explosion, NVIDIA. The company, heralding a clear lead in crafting chips essential for training cutting-edge AI models, experienced an astounding $800 billion surge in stock market value, cementing its position as the most significant percentage gainer among major tech corporations during this banner year. However, NVIDIA's surge exemplifies a common trend observed during burgeoning tech waves. Investments flood into the infrastructure required to bolster AI-driven applications even before the most crucial applications emerge or reveal enough profitability to justify the massive investment. The tech sphere grapples with comprehending the enormity of the unfolding boom. Lisa Su, AMD's CEO, prophesied in December an astronomical surge in sales of AI chips for data centers, foreseeing a staggering climb to $400 billion by 2027, an exponential leap from her prediction of $150 billion a mere 4 months prior. Such conjectures often arise amidst nascent technological upsurges, notes Tierney, underscoring that the current euphoria surrounding AI's potential might have peaked. Private investments into burgeoning AI companies witnessed a sharp incline in 2023, though the volume hasn't quite matched the heights of previous tech booms. Data from PitchBook highlights a substantial influx of $27 billion into private AI firms like OpenAI, pioneers crafting the expansive language models anchoring generative AI. However, Bill Janeway, a seasoned tech investor and former Warburg Pincus head, labels this wave of generative AI investment a boomlet, downplaying its significance in terms of financing. In an intriguing twist, Janeway suggests that the absence of a more substantial AI investment bubble might actually impede technology development, limiting the scope for vital trial and error processes that typically accompany freer capital flows. In the aftermath of a year marked by groundwork laying the AI landscape's foundations, investors shift their gaze towards 2024, reconciling with the anticipated sluggish adoption of this technology, at least in the immediate future. Forecasts from key tech players at the forefront of the generative AI wave lean towards caution, tempering the fervor. Adobe, amid a soaring 90% surge in its shares since the year's inception, rattled Wall Street's hopes by unveiling a 2024 revenue projection falling shy of expectations. Microsoft, a frontrunner in embedding AI within its software, has diligently managed expectations, indicating a delayed surge in sales attributable to its new Copilot features, not likely until the latter half of the year. A significant reason for this cautious outlook stems from the persistent issue plaguing large language models, their proclivity to churn out inaccurate outcomes, eroding their utility in diverse business setups. Schwartz at Salesforce underscores the collective effort underway to address this challenge, foreseeing eventual solutions. He highlights two promising approaches: mandating a human-in-the-loop for generative AI tasks to catch errors and tethering language models to factual databases, ensuring verifiable accuracy when required. However, hurdles loom large, including customers' lack of readiness. Experts, including Janeway, emphasized the potential value companies could glean by training models using their in-house data. Yet Julie Sweet from Accenture highlights a prevalent technical gap, noting that many firms keen on adopting AI lack the necessary data proficiency. Most companies do not have mature data capabilities, and if you can't use your data, you can't use AI, she asserts. Moreover, cost poses a substantial barrier to widespread adoption. Microsoft's decision to peg a $30 monthly price tag on generative AI's use within its Office suite underscores confidence in its value, but may limit access for some customers due to the inflated cost. Analysts caution that such pricing might confine the technology's use to smaller workgroups until its value becomes unequivocally apparent. These challenges collectively suggest a muted short-term impact on tech companies' revenue and profits stemming from novel AI products and services. John David Lovelock at Gartner estimates generative AI spending in the coming year to hover around $20 billion, a mere 0.5% of total global IT spending. To put it in perspective, spending on security will be 5 times greater, emphasizing the cautious approach prevailing in this domain. Suite, addressing Accenture's investors, acknowledges an uptick in tech spending among customers, but notes a slowdown compared to previous years, with much of the AI spending reflecting reprioritization rather than a substantial increase. As the dust settles on the initial AI fervor, the industry braces for a gradual rather than meteoric integration of this transformative technology into mainstream operations, seeking demand. Despite indicators hinting at a potential sluggish start for the uptake of generative AI, the tech industry's enthusiasm remains undampened. Many within the sector staunchly believe that this innovation will permeate mainstream usage at a faster pace compared to other pivotal technologies. Suite's outlook posits that companies are likely to embrace generative AI quicker than they did the onset of cloud computing. Brynjolfsson of Stanford points out a significant advantage for AI over other nascent technologies like the Internet, the existing infrastructure of computing and communication systems. This established groundwork could expedite progress, leading to a quicker integration of AI into various sectors. Macro forecasts echo optimism. Analysts at Goldman Sachs predict a gradual shift in AI investment, initially hovering below 0.5% of GDP but set to surge, reaching over 2.5% by 2032. However, the translation of these projections into tangible demand for tech products and services and the companies that will reap the greatest rewards remain uncertain. Oren Etzioni highlights the absence of a highly monetized killer app akin to the early days of the Internet. Just as with the Internet's evolution, he anticipates that profitable avenues will eventually emerge for generative AI. Investors, meanwhile, anticipate the technology's substantial enterprise monetization potential. Kevin Walkush sees AI's integration into business operations as an extension of the cloud computing trend, where companies extensively invest in migrating their IT infrastructure to the cloud. Tech companies themselves stand poised to be primary beneficiaries by deploying AI within their operations, potentially curbing hiring as generative AI takes over tasks. IBM's CEO Arvind Krishna hinted at this by announcing a pause in back-office staff recruitment, envisioning their roles being replaced by AI. Amazon and Microsoft, aiming to enhance workforce productivity through generative AI, may herald a shift from years of rapid headcount growth, focusing instead on doing more with fewer resources, a development investors welcome. Early research reveals promising business gains from generative AI. Brynjolfsson's study at Stanford showcased a 14% average productivity boost for call center workers within weeks, surging to 35% for those with the lowest skill levels. CEOs are prodding their organizations to explore AI integration, focusing on adapting specific tasks to leverage this new technology, according to Brynjolfsson. Workers are poised to experience the transformative potential firsthand, leveraging AI for report writing, data analysis, and meeting summaries. Microsoft's trials showcased the contagious nature of generative AI's adoption among workers, evolving into a viral trend once they experienced its benefits firsthand, an observation from Jared Spataro at the software giant. Despite the technology's high cost and the ambiguity surrounding its seamless integration into everyday business operations, 2024 might catalyze the emergence of a new work paradigm, a year where the contours of a transformative shift start to take shape.